Hi guys, welcome back. So here we are with the pound Aussie trade that we were talking about yesterday. Just for a recap, we looked at the fundamentals, and we also we had a look at the price structure yesterday, and we looked at getting into a long trade. So that long trade, it just dicked around, didn't do much. So we got out for a tiny loss, and as mentioned in the previous video, decided to let it cook overnight and for that range to develop, and then take a breakout of the Asian range. And so we've had this insane breakout here, and I'll just show you how I got involved. It occurred to me that you could have put this trend line in here and taken the breakout a bit earlier, but I actually took a breakout of the previous day's high. You can see this blue line here. So let's just pop over to, we'll just bang over to a chart that illustrates it a bit more. So I actually did it on the 100 tick chart, so I'll show you how I did that. But first I thought I'd show you how you could have traded it on a 15-minute chart. So look, there was obvious momentum coming into the market. Still, some room to take out risk before the high of the previous day here. So if you were trading it on the 15-minute chart, obviously it shot through here and didn't come back and touch this area. But you could have got in by trading this kind of pretty cool droopy little flag here. So just, bringing a trend line down there and taking the break above the flag, stop underneath, and then scaling out very quickly before reaching this first trouble area. Bang. I never bring my stop to break even. It almost invariably comes back, stops you out to the pip, and carries on. So I use a couple of risk management methods where I can scale out 2/3 of my position at 50% of the stop, and then I don't need to move the stop. And another option I have is to sell half my position at half the stop, and then just move my stop up by half. But I'll stick that in the trading room so you guys can have a look at those two options. So these are for fast breakout moves, the two kind of risk managements that I use. And just looking here on the 100 tick chart, and this is, it's rarely this good. I mean, this is like the one that goes on the wall. It's such a textbook. I'm happy to take a few goes at getting into a trade. So, almost, it very rarely happens like this. The price breaks out, gives you this little tiny pullback. So basically what I do is break out. I place, plus 2 pips, plus the spread above. I place my entry, and under the pullback low, I put my stop. So, this is an amazingly small risk reward. What can usually happen is it breaks out and it does, a series of pullbacks, and then finally it continues by taking out the high again, and you have your stop down here, 40, 50, 60 pips away. But in this case, it was, it was almost no risk. So, so what we're looking at now is, let's go back to the 30 minutes. We'll go back to the other chart, actually. Where are we? So, anyway, I scaled out half the position here. And looking at it now, what can you say? You have to make a decision about where you're going to take profits and just be happy with it. So, this trade it's looking really good at the moment. So I'm just going to let it cook for the rest of the session, and we don't have much time left. So I'm simply going to let it cook for the rest of the session and see what happens, and then make a decision about holding over the weekend or not after sitting down and reading the news wires. But anyway, that's it. So thank you very much, and we'll see you on the next trade.